What if I told you that right now, this very week, some of the biggest financial changes in decades are quietly hitting your wallet, and most Americans have absolutely no idea? Stay right here, because in the next few minutes, I'm going to show you exactly what is changing, what it means for your money, and most importantly, what you can do about it starting today. Welcome back to Frank Join Financial, the channel where we break down complicated money topics into plain, simple English that anyone can understand. Whether you're just starting your financial journey or you've been managing your money for years, this channel is your home for honest, no-fluff financial education. Today's video is one of the most important ones we've done. We're talking about the major finance changes happening right now, around April 28th, 2026, and what every American needs to know to stay protected, prepared, and ahead of the curve. So grab a pen, a notebook, or just give this video your full attention. You won't want to miss a single minute. Let's start with the big picture. Think of the U.S. economy like a giant ship. For the last year and a half, that ship has been navigating some really rough waters. There have been tariffs, tax law changes, rising prices, healthcare cost shifts, and a Federal Reserve that's been trying to figure out when to cut interest rates. And right now, in late April 2026, all of these waves are hitting at the same time. This is not a moment to panic, but it is absolutely a moment to pay attention. So let's go one by one and break down what is actually happening. The first major change we need to talk about is something that is already showing up in your grocery bills, your clothing store receipts, and even your electronics purchases. We're talking about tariffs. And right now, they are at their highest level since 1938. Let me say that again. The highest tariff rates in nearly 90 years. The average effective tariff rate has jumped by close to 20 percentage points compared to where things were before 2025. Now, what does that mean for you as an everyday person? It means that businesses that import goods, whether it's a small clothing brand or a big electronics retailer, have been quietly paying much higher costs to bring products into the United States. And for most of 2025, a lot of those businesses actually absorbed those costs themselves. They didn't want to raise your prices. But here's the thing, they can only do that for so long. Research from the Federal Reserve itself shows that tariffs have already raised core goods prices by more than 3%. And perhaps the most striking finding of all is that American consumers are now bearing about 94 cents of every single dollar of tariff cost. So when someone tells you that foreign countries are paying these tariffs, the evidence says otherwise. You are paying them. And starting right around now, in the second quarter of 2026, businesses that were holding off on price increases are beginning to pass those costs on to you in full. J.P. Morgan's economists have warned that the share of tariff costs absorbed by businesses could flip from about 80% last year to just 20% now. That means prices you pay at the store are likely to keep climbing, especially on clothing, groceries, and imported goods. Now here's a real-life example that might hit close to home. Imagine you're like Maria, a 34-year-old teacher from Ohio. She does her grocery shopping every week, spends about $250 at the store. She noticed her bill started creeping up in February. A few extra dollars here, a few there. Now, in April, she's spending closer to $280 for the exact same cart of items. That extra $30 every week adds up to over $1,500 a year that's quietly leaving her family's budget. That's a car payment. That's a month of utilities. And Maria didn't get a raise. She's just paying more for the same life. Sound familiar? That is the real-world impact of what's happening right now. So what can you do? The most powerful thing you can do right now is audit your monthly spending. Go through every single category. Groceries, clothing, household goods, subscriptions, and figure out where prices have risen. Then build what I call a tariff buffer into your budget. Take the categories where you're spending the most on imported goods and set a ceiling for those expenses. Start buying store brand products where you can. Consider buying in slightly larger quantities for non-perishable items before prices rise further. This is not about hoarding, it's about being smart and proactive, because the families who prepare now will feel far less pain 6 months from now. Let's move to the second major change. And this one has to do with taxes. And it could mean real money in your pocket if you understand it. The One Big Beautiful Bill Act, often called the OBBA, was signed into law in 2025, and it made some very significant changes to the tax code that are starting to take full effect in 2026. First, the tax cuts from the 2017 Tax Cuts and Jobs Act were made permanent. That means lower individual tax rates are here to stay, at least for now. Second, the ABA introduced some brand new benefits. If you work a job where you earn tips, those tips are now tax-free. If you work overtime, that extra pay is now tax-free too. And if you are a senior citizen, there is additional tax relief built in specifically for you. Now, let's think about what that means in real life. Say you are a nurse working 50-hour weeks at a hospital. Every weekend you're pulling overtime. Under the old rules, every dollar of that overtime was taxed just like your regular income. Under the OBBBA, that overtime pay is no longer subject to federal income tax. Or say you work at a restaurant and earn $400 a week in tips. That money is now yours to keep, tax-free. These are real dollar savings that can meaningfully change your monthly take-home pay. And for seniors, if you're retired or approaching retirement, the enhanced tax relief means your fixed income stretches a little further than it did before. But here is something critically important that most beginners overlook. These changes don't automatically put money in your pocket. You have to take action. You need to check your W-4 withholding form with your employer and potentially update it to reflect your new tax situation. If you're not doing this, you could be over-withholding, essentially giving the government an interest-free loan all year when that money could be sitting in your own savings account working for you. Talk to a tax professional or use the IRS withholding estimator tool online. It only takes about 15 minutes, and it can save you hundreds of dollars. All right, I know we've covered a lot so far, but trust me, what's coming up next might be the most important part of this whole video. So stay with me. We still need to talk about what's happening with healthcare costs, Social Security's uncertain future, and the big question everyone's asking, what is the Federal Reserve doing with interest rates? These are the things that are going to shape your financial life for the next several years. Don't go anywhere. Let's talk about healthcare. This is the one that is quietly devastating household budgets across America right now. Here's what happened. In 2025, some major Affordable Care Act subsidies were allowed to expire. The result? An estimated 20 million Americans are seeing their health insurance premiums roughly double compared to what they were paying before. Let me say that again, double. If you were paying $300 a month for health coverage, you might now be paying $600. That is an extra $3,600 a year. And for families living paycheck to paycheck, that is a financial earthquake. On top of that, Medicaid cuts that passed as part of the OBBBA legislation are starting to take effect. According to the Congressional Budget Office, around 5 million people are expected to lose health insurance coverage altogether as a result of these 2026 changes. This is not a political statement. It's just a financial reality that will force millions of Americans to make very difficult decisions about their money. If you're in this situation, or if you know someone who is, here is my urgent advice. Go to healthcare.gov right now and check what options are available for you. New special enrollment periods may apply if your income or circumstances have changed. Look into health savings accounts, also known as HSAs, if you qualify. Money you put into an HSA is tax-free going in, grows tax-free, and comes out tax-free when used for medical expenses. It is one of the most powerful and underused financial tools in America. Now let's talk about something that affects everyone who plans to retire one day, and that is Social Security. Here is the honest truth that most people don't want to face. The Social Security trustees and the Congressional Budget Office have both warned repeatedly that the trust fund for retirement benefits is on track to run out of reserves by the year 2033. Now, 7 years from now, that does not mean Social Security disappears. It means that if nothing changes, benefits could be cut by roughly 20 to 25% at that point. For someone expecting $2,000 a month in Social Security income, that could mean losing $400 to $500 a month in retirement. Here's why I'm bringing this up today. Congress is expected to start floating real proposals to fix this problem. Some ideas involve raising the retirement age. Others involve adjusting benefits or increasing taxes. There may even be proposals around something called Secure 3.0, a new round of legislation to strengthen private retirement savings accounts like your 401k and IRA. The point is, the retirement landscape is shifting. And if you are 40 years old or older, you cannot afford to just assume that Social Security will take care of you. You need to be building your own retirement cushion right now. Even if it's just $50 a month into a Roth IRA, starting today is exponentially more powerful than starting 5 years from now thanks to compound growth. And now, the topic that seems to be on everyone's mind, interest rates and the Federal Reserve. Here's where things get interesting. The Federal Reserve is currently in a very tricky spot. On one side, inflation is still running above their 2% target, driven largely by tariff costs. On the other side, the job market is slowing down. Job openings have dropped. Hiring has been sluggish. The Fed knows that cutting rates too fast could reignite inflation, but waiting too long could tip the economy into a recession. The IMF has actually warned that with the policy rate this close to neutral, there's very little room to cut rates in 2026 without risking a new wave of inflation. What does this mean for you practically? If you have a variable rate mortgage, a home equity line of credit, or credit card debt, you are in a high-stakes environment right now. Rates are not coming down as fast as people hoped. If you've been putting off paying down high-interest credit card debt while waiting for rates to drop, that strategy is costing you money every single month. The average credit card interest rate in America right now is north of 20%. Every month you carry a balance, you're giving away money that you earned. That should make you feel something, because it should. That money belongs to you. My practical advice here is simple but powerful. Attack your highest interest debt with everything you've got. Use the avalanche method. Pay the minimum on all your debts, then throw every extra dollar at the one with the highest interest rate first. Once that's gone, roll that payment into the next one. You will save thousands of dollars in interest and get free faster than you think. And if you have a savings account, make sure it's in a high-yield savings account. Even with rates holding steady, you can earn 4 to 5% on your cash savings right now. There's no reason to leave money sitting in a regular bank account earning 0.01% when better options exist. Let me also touch on something that came up in the IMF's April 2026 review: digital assets and the new regulatory framework. For the first time in a long time, the US government is actively working to create real rules around cryptocurrency and digital assets. This is actually a positive sign for long-term investors in this space because clear regulation tends to bring more institutional money, more stability, and more legitimacy to the market. If you've been curious about crypto but felt scared off by the volatility and the lack of rules, things are starting to change. Now, this doesn't mean you should go pour your life savings into Bitcoin tomorrow. But it does mean that if you've been educating yourself and want to allocate a small portion, say 3 to 5%, of your investment portfolio to digital assets, the environment is becoming more defined. Always invest only what you can afford to lose, and always do your research. So let's pull all of this together, because I know we've covered a lot of ground today. Here's the summary of where things stand and what you should walk away doing. Tariff-driven price increases are hitting your wallet right now and will continue through this year. So audit your budget, build a buffer, and shop strategically. The OBBB tax changes, including no tax on tips and overtime, could save you real money this year, but only if you update your withholding and plan accordingly. Healthcare costs are one of the biggest financial threats for American families right now. Check your coverage options, consider an HSA, and don't ignore changes to your plan. Social Security is on a countdown clock. Start building your own retirement savings today and pay close attention to what Congress does in the months ahead. Interest rates are staying elevated longer than expected. Attack your high-interest debt aggressively and move your savings into high-yield accounts. And on the digital assets front, regulations are coming that may bring more stability to a space worth watching. Here's the message I want to leave you with today. Financial uncertainty can feel overwhelming. Watching prices rise, watching policies change, watching the news, it's a lot. But I want you to hear this clearly. The people who come out ahead financially are not the ones who got lucky or had the most money to start with. They are the ones who stayed informed, made small, consistent decisions, and took action when others stayed still. You are watching this video. That already puts you ahead of most people. Now take one thing, just one thing, from everything we talked about today and go do it. Check your withholding. Open that high-yield savings account. Look at your health insurance options. Start that $50 a month Roth IRA contribution. One step, starting today. If this video was helpful to you, and I truly hope it was, please hit the like button right now. It takes 2 seconds and it helps this channel reach more people who need this information. And if you are not subscribed yet, please subscribe and hit that notification bell so you never miss a video. We post every single week with honest, simple, practical financial education. No fluff, no hype, just real talk about your money. I also want to hear from you in the comments. Tell me, which of these changes is hitting your life the hardest right now? Is it the grocery prices, the healthcare premiums, the uncertainty about retirement? Drop your answer below and let's have a real conversation. Your comment might just inspire the topic for our next video. This is Frank, Join Financial. Thank you so much for watching. Take care of your money, take care of yourself, and I'll see you in the next one.